In this video, I'll discuss Q1 FY26 result and Concall of Sky Gold. So Sky Gold is a B2B gold jewelry manufacturing company. They supply jewelry to customers like Kullan, then Senko, PN Guard Gill, Carrot Lane, and they also onboarded Reliance Jeweler in the last quarter. So they have a kind of 20-25 client. They have a good kind of a client base. In terms of their product mix, their 22 karat gold jewelry contributes around 87% to their volume, and in the last year they have also started making studded jewelry, 18 karat jewelry. In terms of their capacity, they have around 100 kg per month capacity in Mumbai. So let's talk about the result of Sky Gold in Q1 FY26. In terms of the revenue, they grew their revenue by 56% in this quarter, which is in line with their guidance of around 50% of growth in FY26. In the last quarter, they gave a guidance of 400 crore for FY26, which is around 50% CAGR, and in FY26 they are guiding us for a 7600 crore of revenue, which is around again 50% CAGR, and they can increase their guidance also, and I think they have to because of the new acquisition they made in terms of the Ghana and gold, and if they can get more client, if they can acquire more client, they can also increase their guidance. So that is the point. In terms of their volume, in this quarter they grew their volume by 30%. They registered a volume of 456 kg per month volume in Q1 FY26. But if we look at their standalone number, like in total they done a volume of 456 kg. From standalone they got around 120 kg, 60 plus 60, 120 kg. So if we look at their standalone volume, then it is around 350 kg per month in Q1 FY26. But if we look at their past, in Q2 FY24 they were at 250 kg, and in the next 4 year, in the next 4 quarter, they were able to increase their volume from 250 kg to 350 kg. So in Q2 FY24 they were at 250 kg. In Q1 FY25 they were at 350 kg, and if we look at Q1 FY26 they are at 350 kg standalone. Okay, so if we look at their last 5 quarters, they have not been able to increase their volume at a standalone level. All of the volume increase happened because of the acquisition they made in the Q2 FY25. So that is a concerning thing, that if Sky Gold is able to increase their wallet share from their client, if Sky Gold is acquiring new clients, then why the volume is not going up? So that is the question that remains, and that is why Q2 FY26 becomes very, very important, because the management is guiding us for a volume of 580 kg per month in Q2, and this guidance is ex Ghana and gold. So if we include Ghana and gold, because the acquisition will be completed in August month, so if we include Ghana and gold also, then the guidance is around 640 kg per month in Q1 FY26. So if we look at their guidance ex Ghana and gold, that is at 580 kg per month in Q2 FY26. That is an increase of 130 kg in just one quarter. So that is why we have to see that and how Sky Gold is able to uh, match their guidance, because in the past, if we look at their history, like their track record, they are achieving all kind of guidance in the last 1-2 years. So that is the thing we have to look at in Q2 FY26, and they are giving a guidance of 630 to 650 kg per month volume in Q3 FY26, and then 650 kg per month volume in Q4 FY26, and all of the guidance is ex Garner Gold, and they are guiding us for a 900 kg kind of a range for FY27. So that is the guidance they are giving. At a time, if we look at it, it sometimes feels that the guidance are really big, the targets are really big, but if we look at the reason the management is giving this kind of a guidance is that they are saying, one, their clients is going to open around 2500 stores in the next 2 years. So from the orders from the new stores will come to in some percentage will come to Sky Gold. That is number one reason. And the second reason is wallet share they are gaining from their customers. Like 5 years back, they had around 1% wallet share from their client. In the if we go back 2 years back, the wallet share was at around 3.5%, whereas as of now they have a wallet share of 5%. I think it is 5 to 7% wallet share they have currently from their client. So if they can grow the wallet share to like 8-9% also, then it is really good. So that is why the management is very confident of getting the volume to a level of 900 kg per month by FY27. So that is the point. If we look at it, then we can say one thing, that even if they are not able to like increase the wallet share from their client, then also as the clients are opening like a huge amount of stores in next 2 years, they can also they also can grow at a high level because of the orders from the new store will flow. So that is the thing. And the target they have, like now they are making around 1% of the India's volume. By FY23 they are targeting 4% volume, 4% of India's total volume of gold jewelry. So that is the target they have. Now they have just 1% market share of India, of whole India, and they are saying that they will reach at 4% market share by FY32. Okay, so that is another point. But for the short term, if we look at for next 1 year, the question remains that will they achieve their guidance or not? Because as I said that in Q2 the guidance is huge, like they have to increase their volume by 130 kg in just a quarter. And another thing, they are saying that why they are giving that kind of a jump, that kind of a increase in the volume, because all the festivals like Diwali, Muhurat, all are in October, all are in November. Okay, and and retailers, B2C companies give the order 90 days earlier to the B2B companies. So that is why they are saying that we can increase our volume in Q2 FY26. So that is a really important thing to look at in the Q2 FY26. So that is the point with volume. In terms of the 200 kg per month export order, in this quarter Q1 FY26 they delivered around 40 kg of order, and they are waiting for the Dubai office to incorporate. So that is the point they are waiting. Why they opened the office in Dubai? The management is saying that the Indian banks charge around $5 premium over the gold price, whereas if we go to Dubai, we are getting the gold at a discount of $10-15. So net they are getting around $15 discount if they buy the gold from Dubai. So think about that. The difference is what? If they buy the gold from Indian banks, then the gold prices increase around $15. So what can happen? The Sky Gold take the hit on their margins, on their profit and loss, and provide the jewelry to the customer at a rate of the Dubai at the rate of Dubai. One other thing can happen, that they ask the customer to bear the cost. So think about that. Why the customer who is outside of India, why the customer would come to Sky Gold if they have to pay $15 extra? There is no reason, because there are thousands of manufacturers outside of India, even in India also. So there is no point they would come to Sky Gold. So that is why Sky Gold is opening the office in Dubai. So that is the point. And they are giving a guidance of like in Q2 they will deliver around 100 kg in total. From Q3 they will reach at 100 kg per month. Okay, and by Q4 they will reach around 150 kg per month for this order. So that is the point with 200 kg per month export order. And in terms of India also, they opened a office in Kerala to cater to those small B2C companies who have like 1, 2, 3 stores within their company. So that is why they opened another store in Kerala to cater the small businesses. That is a point. In terms of the export business, in this quarter the export business contributed around 12% to their revenue, and they are expecting 17 to 20% of revenue contribution from export business by FY26 and 25 by FY27. So the guidance is pretty good in terms of the export business, and export business also helps Sky Gold in two front. One is margin, one is the working capital, because export business have around 0.5% extra margin, and then because export business is kind of a cash and carry business, or if not cash and carry, then it is around 7 to 10 days receivable. So that is why export business will help Sky Gold to improve their margin and also improve their working capital cycle. So that is the point export business can do with Sky Gold. And in terms of the guidance, they have a really good guidance of 25% revenue contribution by FY27. In terms of the advance gold, in this quarter the advance gold is around 5% of their whole volume, and they are expecting 7.5% by FY26 and 10% by FY27. So that is the thing they are expecting. In terms of the working capital also, advance goal will help Sky Gold to improve their working capital cycle, because Sky Gold does not have to invest money on the inventory, because obviously the inventory is provided by the customer. So that is a point with advance gold. And with advance gold, what is how they recognize the revenue from the advance gold? It is like, in a normal case, when they are buying the gold and making the jewelry out of that gold, like if the jewelry price is around if they selling a jewelry at a price of 100 rupees, then they have to register the whole price to the revenue. Like they add 100 rupees to their revenue as they sell a jewelry of 100 rupees, and then the whole process begins of gross profit, EBITDA margin and all. But with advance gold, like as the raw material is provided by the client, they do not have to buy anything, so they can't register the whole value of the jewelry. They have to add only the making charge to their revenue. So advance gold business will help Sky Gold to increase their gross profit margin. Okay, so that is a point we have to mark, that in the future gross profit margin will keep on increasing as the advance gold business will increase. So that is a point, that is a really big point if we see the gross margin, because in this quarter they increased their gross margin by 150 bps. So that is really a good kind of a margin expansion in terms of the gross profit margin, and we can expect it to grow it further as the advanced gold business will increase. So that is the point with gross profit margin. In terms of the EBITDA margin, they increased their EBITDA margin by 115 bps in this quarter. They registered a EBITDA margin of 6.3% in this quarter. If we look at their product wise EBITDA margin, then 22 carat gold jewelry contributes around, it is not contribution, but in 22 carat gold jewelry EBITDA margin is around 6 to 7%. In 18 carat gold jewelry it is around 7 to 9%, and in diamond studded jewelry it is around 12 to 15% of EBITDA margin they are getting. So as the product mix changes, like if they able to increase their 18 carat contribution, if they able to increase their diamond studded jewelry contribution, the EBITDA margin will be higher. So that is another good point in the margin expansion. So that is the thing, because if we look at their performance in terms of the product mix change, 18 carat gold jewelry contributes around 7% to the volume, whereas in the last year it was contributing around 4% to the volume. In terms of the studded, it is around now 7.7 to 1%, which they started just few quarters back. So as the studded portion increases, there will be margin expansion. So that is the point with EBITDA margin. In terms of the PAT, in this quarter they grew their PAT by 105%. So if we look at their revenue growth, they grew their revenue by 55%, whereas they grew their PAT by 105%. So they are getting constant operating leverage for last several quarters. If we look at their past, so that is the point, they are getting constant operating leverage, and they also will get operating leverage in the future also, because of the product mix change, because of the like export business. So that is what they can do. And in terms of the PAT guidance, they are giving a guidance of 350 crore of PAT by FY27, which is around 63% CAGR, okay, for next 2 years. So in this quarter they grew at a high pace of 100%, whereas the guidance is around 63%. So yeah, the PAT growth is really good for last several quarters if we look at their past. In terms of the PAT margin, they increased their PAT margin by 91 bps in this quarter. They registered a PAT margin of 3.85%, whereas their guidance was only 4% for FY26, which is likely they already kind of reached that 4% mark in Q1 FY26. So yeah, that is really good that in terms of the margin also they are reaching the margin in the beginning of the year. So they can improve further in the next quarter, because if we look at their last quarters, they can improve it further to a level like 4.2% of PAT margin by FY26. And also they are giving a guidance of 4.5% of PAT margin by FY27. So in terms of PAT margin, they are expecting a constant increase, and they are expecting a constant operating leverage for next 2 years. So that is the point with the PAT margin. In terms of the capacity they have, now they have around 1050 kg per month capacity. After the completion of acquisition of Gunna & Gold, they will reach around 1300 kg per month capacity, because Gunna & Gold is around 150 kg per month capacity. So we can expect in the next quarter the capacity will be around 1300 kg per month. So that is number one. And if we talk about their long term plan, like they are planning to open another 4.5 ton per month capacity by FY28. So that is a huge kind of expansion they are planning. It is right that they will reach 4.5 ton, 5 ton gradually. Like what is their guidance for FY25? Their guidance was 450 kg. For FY26 their guidance is around 650 kg. For FY27 their guidance is around 900 kg. Like they will reach the 5 ton per month capacity utilization by like FY20, FY32, FY35, because it is a long journey. It is not a journey of 1 or 2 days. So that is what I am trying to say, that the capacity will add up to them by FY28, but the capacity utilization will be gradual. So that is the point with capacity and capacity utilization. In terms of the receivable day, because if we look at their Q4 FY25, their receivable days were shot up to like 50 kind of level, if I am not wrong, because of the Akshay Tritiya sale, because they have to send the gold to the jeweler, and there will be some kind of a delay from the B2C company. So that is absolutely fine. And in this quarter they have been able to bring down the receivable days to like 32 day, whereas in the last quarter it was 40 day. Okay, it was 40 day in Q4 FY25, and in this quarter they have been able to bring that receivable days down to 30 day, and they are saying that they will improve their receivable days to like 25-26 days, because of the obviously export will contribute to their revenue in the coming quarters. Advance gold is there, so that will bring that the receivable days lower even further to around 25-26 days. So that is the thing. In terms of the working capital cycle also, they are expecting to improve it further, because obviously the export business, the advance gold business. So that is the point. In terms of the, if I talk about the whole company, in terms of the whole company, how the company is performing, they are achieving every kind of guidance for last few quarters. They are achieving the revenue growth, they are outperforming the revenue growth, they are outperforming the margins also. So in terms of all kind of guidance, they are achieving all of them. And if we look at their all the parameters, like revenue, like margins, like the working capital cycle, cash flow, all the things are going in a right direction. Okay, so even if they miss their volume, there is multiple reason, there is multiple way the company can grow, the company can improve. So that is the point we have to see. But yeah, Q2 will be important because of the volume, that if they can able to reach their guidance of like 580 kg per month volume or not. So that is the point we have to track very closely in Q2. So that is the point with the Sky Gold. I think the company is moving in a right direction. It is not about one quarter, it is not about 1 year, it is about a journey that they have to cross. It is a long path. Like as I said in the market share portion also, that they are now 1% of the India's whole market, and they are planning to reach to the 4% of India's whole market. So that is the thing. If they can reach that level, just imagine how big Sky Gold will be. But again, the thing is that do not get flown by this kind of statements. Track the company every quarter, that how is all the parameters are going. Take decision in terms of the growth. And in terms of the valuations, Sky Gold is trading at a very comfortable rate. If we compare it to their guidance of revenue growth, guidance of PAT growth, that is really is in a comfortable level. So that is one thing I can say. But if I say about the company, that is going in a right direction. I am not going to say that you have to buy or not. I am not for that. You have to decide that where the company is going, where the company will end up after next 2-3 years. So that is the point you have to see, and you keep tracking the company, keep tracking all the company, and see where the opportunities. If there is opportunity elsewhere, go there. That is the simplest thing you can do. So that is the point with Sky Gold. So I do not think I have anything left to talk about. So that's it for the video. Thanks for watching.